And there it is.
Hello. No, that's not me roaring in the background. We are not moving. Wendy is. She's in the background. You can hear her humming in the background.
Sorry
Have you
about
guys
that.
ever wondered if you have an IRA, how difficult is it to do your end of the year valuations on your assets? And some people think it's even more difficult when you're in a fund. Well, we'll let you know if it is more difficult right after this. Hi, everyone. Welcome to the Passive Income Show, or Passive Wealth. Hell, we don't know what the name of our show is. I'm Bill Fairman. This is Jonathan Davis. Wendy Sweet is on the road. She is joining us in the background. We are Carolina Capital Management. We do loans for real estate investors in the Southeast. If you're interested in borrowing money, then go to our website at carolinahardmoney.com. Click on the Apply Now button. If you're a passive investor looking for passive returns, click on the Accredited Investor tab. Do not forget to like, share, subscribe, hit the bell, all that good stuff.
You nailed it. And if you'd like to chat with us, you can chat on the side, below, above, I don't know, wherever it is.
Wherever, when you start typing, things start appearing. But typically it's on the right or to the bottom of your screen, depending on the platform you're viewing us from. So it's been an interesting week. Today is the 21st of April?
I think so.
And typically
it's 22nd, actually.
22nd. So typically in our part of the country, once you've passed April the 12th, it's okay to start planning your stuff because no frost.
And then last night.
Now, this morning it was 30 degrees. By the way, the freeze warnings, so we could go put in our tender plants or cover them up, came out at midnight last night. So we had plenty of time to take action.
Yeah, my wife's growing some plants and has some grow boxes, and all the sheets in our houses went outside to cover all the plants.
Yeah, they're more protected than you are.
Oh, yeah, that's right.
Excellent. So we're going to do some updated breaking news right now. We're going to call Sharub Quick Draw.
Quick Draw. Yeah.
Right with the graphics. Thank you, ma'am. Again, employment numbers, unemployment numbers, if you will. First-time claims were well below expectations. They are hit the lowest since the pandemic started.
Yep.
So it was 547 million. I'm sorry, 547,000.
That's a lot of people. That's more people than the United States.
And they revised last week's down to 570 something thousand. So not bad. And then continuing claims were also at the lowest. It was 3 million and some change. So
nice.
Things are looking good. Now, I don't understand these numbers. I always thought continuing claims was how many people were still unemployed, but apparently that's not the case because they said 17 million people are still unemployed receiving benefits. So how is continuing claims being 3 million and 17 million still receiving benefits? How does that work?
How those numbers work?
Yeah, I don't get it.
I have one word: government.
So this past week, we've got a bunch of people being interviewed that own restaurants and stuff. And they're trying to gear up. They can't hire anyone. People will not answer the ads because, frankly, they're getting paid in a lot of businesses more to stay at home than they are to actually work.
Yeah, and that's the the big thing is are people incentivized to not be productive?
Well, you know what? I hate to be a conspiracy theorist, but if you think about it, what better way to raise minimum wages without having to make a law than to start paying people not to work, and then you're forced to raise minimum wages to get people to come to work? Maybe,
yeah. And that only works if you couple that with inflation.
Yeah.
Because if the cost of living stays the same and they're still okay not being productive and receiving government employment, then, and living their same life, it's probably not too much of an incentive to work and go make more money than, but if cost of goods go up, then you have to.
Right.
Yeah.
I agreed.
Mm-hmm.
So housing numbers. Now we always have to do a look back because all these numbers are always rearward facing, as it were. February's existing home sales were the lowest existing home sales since they've been keeping record. There were only 840,000 homes listed for sale.
Really?
In the entire country
in February.
And they've been keeping records since 1982. But that's pretty low. If there's only 840,000 nationwide, that's tough. Now rates went up a little bit, so they said that might have had something to do with it. I don't believe it because rates are so low now.
I mean,
rates did tick back down to under 3%. It was like 2.97.
Yeah.
on a 30-year. So that's good news. The problem is we just don't have enough inventory. We didn't build enough homes. People aren't putting their homes up on the market because, frankly, where the hell are they going to go when they do sell their house?
Yeah, and then let's see. So Scott said, "Do you think inflation will increase?" Do I think inflation will increase?
Well, let's get that.
Okay.
Get to that in just a second. New home sales.
Yeah.
40,000.
Okay.
Are available for sale in March.
In the whole nation.
Yes. Typically, they want a typical year is around 80,000. So they're not building any new homes, or at least not building them quick enough either, because the cost to build homes are much higher. And frankly, the home prices, the price point where a builder is going to start making margin is going to be above the median price point.
Yeah, because the cost of goods are so high right now.
And most of the people that want to buy homes are going to be at the median or below.
Yeah.
So we have a problem, Houston.
Well, and you said 17 million people are still receiving some form of government, unemployment benefit. I mean, does that play into the homes being sold? Like, are there less people? Because if you're on government's, if you're not employed, can you get a loan?
Well, yeah. No, you can't.
No.
The other thing is that some of the numbers that people aren't really considering is a lot of the new builds now are being built to rent. They're not going on the market.
Correct.
So you still have higher housing starts, but there are lots of communities that are being built specifically to be rentals. Yeah,
I mean, I talk to people almost daily. That's something that's going on, whether it's mobile, modular, or stick built. There's a lot of rental communities going up.
Well, listen, when prices get to a certain point, is it better to rent? Wait for the prices to come down, because we all know this is cyclical. This is a cyclical business. I'm old enough to have seen at least 4 cycles in real estate. Most all of it was interest rate controlled.
Yeah.
2008 was completely different. That was just a freezing of the capital markets. But that said, there's always going to be ups and downs. And rent, well, the prices are really high. Buy when the prices come back down again. If you can do that, not everybody can.
Yeah.
Let's get to Scott's question. Do you think inflation will increase?
Bill, do you think inflation is going to increase?
The simple answer is yes. We're going to continue to see inflation because until the government stop printing extra money, we're going to get inflation. You can't continue to make money more available without the cost of goods going up.
Yeah.
Right?
I mean, you'd almost think that's economics 101.
You look at the stock market, and I think we went over this last week. Your stock market is based on cash flowing businesses,
which most of them aren't.
Well,
I would say actually, most. A third of them aren't.
A lot of them are because of the pandemic, because now they can utilize e-commerce and virtual employees. They don't have to pay the travel expenses they used to pay for their executives and salespeople and that type of thing. So
It's
they are a lot more efficient.
What was the CEO of Lowe's? Yeah, I think his normal salary with compensations was 11 million, but during 2020 it was 23 million.
Really?
Oh yeah.
Why was that?
Extra bonuses for milestones reached on sales. Yeah, but anyway, so I hear what you're saying, that there's money saved, but it's like, is it money saved? I don't buy into that.
We're a perfect example of that. We saved quite a bit in expenses in 20.
Sure, but we're not publicly traded, so one of the differences in a publicly traded company, when debt is as low as it is, they're buying back all their stock.
Sure.
So they're amassing debt to buy back their stock, to inflate their stock prices, because the CEOs are paid bonuses on the stock prices. Right. So when you start amassing that much debt, when you actually take that into account, they're probably not cash flowing.
Well, their stock prices are going to be based on earnings. And that's the thing I hate about the stock business, that most companies are only focused on next quarter's earnings.
Mm-hmm.
Home Depot is one of those that are not like that. They have they're always looking 10 years ahead.
Yeah.
And even when things were bad, they were still focusing on what's happening in 10 years. They're getting a little pushback now because of the Georgia voting thing right now, because they didn't say anything. They tried to remain neutral.
Mm-hmm.
I tell you, politics is in everything now. Now, that said,
so there will be huge bonuses paid. Yeah.
I want to talk about Credit Suisse as well.
Ooh, yeah, that's a fun one.
They were one of the big commercial banks that were involved in the Arcos, I think it was called. It was a family office / hedge fund that was levered at 5-1. So those of you who don't know what that means, they were able to buy 5 shares of stock by putting up the money to buy 1. And these banks, these investment banks, would basically lend them the money to buy 5 stocks with only enough money to buy 1.
Yeah.
And unfortunately, this investment firm, this family office, bought a bunch of stock in volatile sectors. And when the price went down, they have to do what's called a margin call. So they have to put up more money to back up these stocks because the prices have dropped. Well, if they don't have the money, then the commercial banks go in and they take possession of those stocks and they sell them for them on their behalf. But
at huge losses,
it's their collateral, essentially.
Yeah.
So what happened with Credit Suisse is that while all these other financial institutions are posting record numbers for the first quarter, they had a $240-something million loss for the quarter. And they've already said that they're going to post another $200-some-odd million loss for the second quarter. And now they're selling all those shares they bought when they were cheaper to try and raise more capital. Now, is this going to be systemic? I'm not sure. I don't know the answer to that. However, are other investment banks going to start going back through their portfolios now and see who they're levered with and maybe change the rules? And this is why we always talk about it. It's nice to, as a private company like we are, it's okay when institutional investors come in and work with you. And we definitely utilize them when we can, but you don't want to be dependent on them, because they will change their mind at the drop of a hat.
I mean, all it takes is one regulatory change, and it's over.
Well, not even a regulatory change. If somebody does something stupid and loses a bunch of money, then they all say, "Well, we better not do the same stupid thing."
Yeah.
And then they just pull back.
That's true. Yeah.
And then another shiny object may come along, and they want to focus their attention on those. And so while I say this to all people in our industry: utilize the cheap money while you can. Just don't make it a business model, because eventually you're going to lose that model, and it will bite you. Trying to keep as much of your independence and your um, uh, control as much as possible.
Yeah, I mean, if we were dependent on one borrower to keep us in business, man, that's not a good thing. Just like one borrower should not be dependent on one lender to keep them in business.
Absolutely.
Yeah.
Okay. I think it's about time for our ugly question. We've depressed people enough, don't you think?
Sure.
Okay, today's ugly question. Why can't the fund manager provide valuation to an IRA company more easily? Was that teed up for me or what?
I mean, that has Bill written all over it. Like, Bill, why can't you do this faster?
And I'm really surprised at that question, because getting the valuation in a fund is the easiest thing to do anyway. So for those of you who do not have an IRA, at the end of every year, the IRS requires that you get a market value on your assets that are being invested. So let's say your IRA is invested in a house. So you buy a rental property. Well, they want to know what the value of that rental property is, because they want to know what the value of your investment is. They want to keep track of that as you go along. So in most cases, if you own a home, you're required to go out and get an appraisal done to prove what the value is. If you're lending money, if you're doing individual loans, then they're going to require the documentation to be a copy of the note, along with an amortization schedule, maybe.
If it's amortizing,
they want to see the copy of the note to let you know, is it an amortizing loan? Is it an interest only loan? So they want to see what the value of that asset is.
So if you're the lender on it, or if you're in a fund who is the lender on it, and you're passing through that to the IRA, then the value you're saying is just the note value?
If it's an interest only loan, it's the note value, because the current market value of that investment is the note plus the money that you've received from the payments, assuming you're getting monthly payments, would be already in the account, and that's accounted for through the IRA custodian. So any cash in the account, the custodian is validating
that's the value, cash,
and then whatever is remaining on the note, you're validating with the copy of the note.
So if you lend, you only have to provide the note. If you are buying properties, you have to get an appraisal done. And you have to get an appraisal done every year?
Yeah. Well, you're supposed to. Most people will do a printout for the tax value.
I was going to say, like, can you use the tax value?
You can, but again, the IRS says they want an appraisal. That said, they're not going to go after everybody who's printing out tax values along the way. And then when you sell that asset, there's going to be a value there, so they'll know the difference, at the end when you sell it.
Well, if you only, I'm just curious now. So if you only provide a tax assessment, like you go to the tax assessor's website, print it off, and that's what you provide, but it's not what the IRS wants. Is that enough to blow up your IRA, or is that just a slap on the hand?
That's not a question for me.
I was just curious.
I'm not an IRS specialist.
I've never heard anyone say anything about it. So
if they went after every single IRA that owned a piece of property in it because they got a tax value instead of
they'd be really busy.
appraisal,
yeah.
I don't know what they're going to get out of it.
Okay. I was just curious.
That said, the IRS is known for their customer service. So
that is true. They call you between the hours of 9 and 5. They're on different numbers constantly, usually from your same area code.
So
answer those.
When your money is in a fund of some sort, it's typically the fund manager that is going to provide the valuation. And there are forms that the fund manager can fill out with the custodian. Some custodians, we have a lot of accounts with one particular IRA, and I'll go ahead and say their name, Quest, and they allow us to print out a report from our portfolio that gives the value of everyone's account and the total value of the fund. And that's all that really the information they need to know is what's the total value of the asset and what is the value, the value of our client's portion of that asset.
So you can print that report off and send that off pretty much, immediately. That's all it is. So it seems like it's pretty easy in a fund.
Yeah, it's very easy in a fund. Now, for those custodians that will not allow for the report, we still have to physically fill out the form that they provide for us, which is still not a big deal. It's the form that we filled out, my signature, and then the last statement for that customer attached and sent to them. It's not that big a deal. And it doesn't cost them anything. Most fund managers are doing that free of charge anyway. It's a lot cheaper than getting an appraisal.
Gotcha.
Right.
So for everyone that has multiple IRA accounts and they're not in the fund and they're just lending or buying properties or whatever they're doing in that, buying gold, stocks, whatever, what have you, they have to provide an evaluation for each account.
Current market value of every asset that is not in cash under a custodian's, what do you call it? It's not in their portfolio with the custodian who has control over that asset.
Yeah.
Because you can invest in anything you want that it's not a collectible or
but you could do
like
collectibles.
No. Not that I'm aware of.
Was that a 401k that guy was talking about?
Well, 401ks are a little bit different.
Yeah.
You can invest in different stuff in a 401k than an IRA.
Yeah.
Again, that's another topic for somebody. My suggestion is that Quest IRA has tons of education on their website. Kama Plan has tons of education on their website.
American
IRA has tons of education on their website. So I would go to all of those and get the poop. You may not have as much information on 401ks because they don't typically deal with a 401k, but they do have the solo 401k, and the rules are a little different for a 401k than there is for traditional or Roth IRAs.
Yeah. Switching gears here just real quick because I see we have a little bit of time.
Yep.
Did you discuss inflation versus stagflation versus deflation last week?
Yes, we did.
What'd you come out?
Don't bring that up again because my brain hurt from last time.
What'd you come up with?
Inflation.
Okay.
It's hard to say whether we'll have the stagflation. That's going to have a lot to do with government. But to me, it's just going to be inflation.
Yeah, I mean, stagflation would, basically, I'm sure y'all went over this, like requires a stagnant economy, one that, there's not wage growth, job growth, right. GDP growth. But the GDP, 2/3 or up to 70% of it is influenced or determined by consumer,
right?
Like the spending on consumer goods. There's a lot of people out there thinking that Q1 is going to end up looking like not so great on the consumer side, just because, people who are getting back to business, they may not know that, quite a few of their suppliers are out of business now. And, it's like the economy is trying to stock back up with all those goods that have been run low. And then they're saying that some people are saying that we're going to have a huge consumer boom in Q2, which, we're in right now.
Sure.
And, it's going to explode. So we're going to have this marginal smaller than expected number in Q1. And then we're going to have this boom in Q2, which will then continue down the road. So if that is the case, then it is inflation.
Well, it's hard to say. I've heard people's predictions of 6 to 7%
inflation.
GDP.
Oh, GDP
in quarter one.
See, I think it's going to be closer to. I think it's going to be like 2. 2.4.
But you look at all these dollars that the government keeps doling out. A lot of people are paying down debt. They're investing it in the stock market, and that's not going to show up in GDP because they're not buying anything with it. And they're taking that money, maybe they're using it to do speculative investments with, because it's free money anyway.
You know what's so funny to me? It's like people are measuring this GDP and they're like, oh, we need it to be super high. And it's like, oh gosh, people are paying off debt and they're saving money. Man, this is gonna kill our GDP. It's like our GDP is being driven down on the speculation basis because people are potentially being more responsible.
Yeah, well,
I love it.
It's been a long time since we've had a down market, and the pandemic kind of woke people up that, hey, maybe I really do need 6 months worth of savings in the bank to take care of times that are completely outside of our control. And yeah, if I have all this extra debt, there's no guarantee that my job's going to stay there.
Yeah.
So good for us for being a little smarter.
Scott said, let's see, aren't they using the relief money to pay rent? If only. I'm sure a lot of people are, but there's probably just as many who aren't.
Well, if the government's giving you money and they're also saying, hey, you don't have to pay your damn rent because they can't kick you out.
Mm-hmm. Yeah.
Sometimes you're going to spend it on something else.
Yeah. I hope they are. I mean,
we're hoping they are.
That's the issue that just it really gets to me. It's like you, as a renter, and I'm not hating on renters, love renters. You can save all this money, not pay your rent. You're getting all this money from the government and you're saving it, which is kudos to you. Good for saving money, but you're not paying your rent. So that's not good. But then you have the lender who owns the property who, has to pay their mortgage, and they have to get a forbearance agreement or some kind of, modification agreement because now they can't pay them.
Yeah.
So then you have this renter who can walk away with thousands or tens of thousands of dollars. But then you have this landlord who's stuck that has to pay back all this back owed mortgage. And it's like we need to help everyone for sure, but it feels like we're skewing the help to maybe one side and not as much to the other that really needs it.
Well, landowners, landlords, they're evil.
Well, I know that they're all super rich and wealthy and they're all evil.
That said, if you are a tenant that is doing this because you're just getting free money and you don't have to pay because you can't get kicked out, you're going to have to live somewhere eventually, and that's going to ruin your opportunity to get a place in your name. Yeah. So you better find a mate that's got good credit and has paid their.
Well, and here's the thing: we see more, and I hear more of this in the Northeast and the Pacific West. Like that's where I hear more of these, and that has to do a lot with the government regimes that are there. But like in this, like down here, like all of my tenants have paid.
Yeah.
Like they so I think it's also a mentality. It could be a mentality thing as well. It's, people down here aren't being told as much, I think, as in the Northeast and the West that, hey, you don't have to pay.
Well, most of the investors that we know in this industry all have very, very low delinquencies in their rental portfolios because they were out front and communicating from the beginning, and they rent to a class of client that is most likely to pay.
Yep.
All right, listen, we got to wrap it up. Don't forget Wednesday with Wendy. Go to her link right here, and she provides free mentorships on Wednesday. She's booked out about 2 months, 3 months in advance. So hurry up and get your spot in place. Don't forget to like, share, subscribe to our channel.
Hit the bell.
Yep. Now, again, we are Carolina Capital Management. We lend money to real estate investors in the Southeast. If you're interested in borrowing money, go to our website, carolinahardmoney.com. Click on the Apply Now tab. And if you're a passive investor looking for passive returns, click on the Accredited Investor tab. And lastly, thank you so much for joining us on the Passive Wealth Show. We will have our next show here shortly, and we're going to talk about deals or no deals. And we might also have a surprise from someone on the road. See you later.